Yeah, I think everything is fine. The sound is coming. Okay, so let's start. So, hello everyone, and so today's video is going to be a special one, and today is 9th of October, and yes, so the last 2 weeks I was a little busy. So I was on holidays, and then again Durga Puja, and so I couldn't make videos on YouTube. So, but I gave you all live analysis on Twitter. But yes, actually, like during the live market, I didn't get time to post the live analysis. But yes, the end of the day analysis I posted almost every day. I missed one day, I remember, but the other days I posted. So yes, this video is going to be very very important. Like what happened was many times I get comments from many of my viewers that please check whether your indicator is having this concept, that concept. Okay, so this ratio, that ratio, and if the concepts are similar to some YouTuber who is having millions of 1 million followers. So I don't want to name that YouTuber, but yes. So they post, they send me these YouTube videos of this YouTuber, and they tell me to follow that. Okay, so I have seen those YouTube videos. Okay, but yes. So first of all, I would like to say that whatever I have thought, and I'll show you with proper examples that some of the concepts are wrong. But yes, I do have some respect for this guy, because this guy is always pointing towards data. That's absolutely a very good sign. But yes, some of the concepts are wrong, and we should notify. I thought about notifying those to you, because you are blindly following such concepts, and you're not. I mean, you are also pushing me to follow those concepts, which I think they are wrong. Okay, so yes, but again, I'll say that yes, you should respect that YouTuber. So because there's a reason for that, because that YouTuber follows data, and I've seen that he does not do something like "mujhe lagta hai." Okay, that is a very very harmful indicator. "Mujhe lagta hai." Okay, so I've seen big Twitter profiles just posting सी बाई कर लो, मुझे लगता है कि ऊपर जाने वाला है. That's it. Okay, so this is a very harmful indicator. You should be you should be very careful about those things. Like there is one Twitter, big Twitter profile who just posted, I think the last week or the last week, that see buy kar lo. Okay, so in huge lots, whatever you have in huge lots, buy. See, though the data was bearish, but I told and I also posted on Twitter. Those who follow me on Twitter knows I did not name that person, but told on Twitter that you shouldn't follow that person, because that is a very wrong concept. Okay, so I think that was just okay. So yes, yeah. So that was this. I think here. Then after that, market reversed here. But yeah. So this was the region where that Twitter member told everyone to buy CE in whatever money they have. So buy everything in CE. Call side. Okay, so I posted on Twitter that it was a very very wrong way to go, and so you should understand. So whenever this big Twitter profile, so they are paid in huge. Okay, if they show you that yes, I have also taken position, so you must question them. So those positions are just taken with the money that he or she has been provided with. Okay, so something like BAP of cheats. Okay, so you should be careful with from BAP of cheats. So that's the concept. But yes, today the wrong concepts that I am going to tell you about the YouTuber. But yes, I won't say that that YouTuber is a cheater. But I truly respect that he is following data points. But yes, he should also accept that. I may also go wrong sometimes. So it's nothing wrong to go wrong. Okay. So yes, but if one is clarifying your mistakes, you should act with concepts. You should accept it. Okay. But yes, there is one problem with this YouTuber is he is very egoistic and he doesn't accept his mistakes. Okay. So if you see that a YouTuber never shows that I went wrong today. Okay, always shows that yes, I know everything. This happened there, that happened there. At the end of the day, at 9 p.m., everyone can tell. After the end of the data, after the whole day of watching the market, everyone can tell what happened where. Okay, so that's not the thing. You came here for. Okay, market after market, anything can tell any story. So it doesn't matter. Okay, but yes, if one is in the stock market and one is saying that every day I knew everything, then you know everything about that guy. Okay, so that's the one point. Again, I don't like about this because he's very egoistic. He doesn't accept his mistakes. Okay, so let's talk about the very first mistake, normalization of data. Okay, so let me again tell you what we are going to discuss. First of all, we are going to discuss this is going to be a very, very interesting video. So, but it might be lengthy. So first we are going to discuss the wrong concepts taught by some big YouTuber, which you are blindly following and you are also pushing me to follow that. And I'll explain with proper concepts and examples. Then we are going to discuss the end of the day data analysis, tomorrow's important levels, and then we will discuss the big game that is being played in the market. Okay, you have to also understand the psychology or the big game that is being played, how you are being fooled. Okay, so first let's start with the normalization concept. So the thing about normalization is there are two types of normalizations. So the min-max normalization and majorly there are two types of normalization, Z-score normalization. So these normalization techniques are for data sets which are static. Okay, so they are not changing. The data sets are not changing. You have a data set, that's it, you are normalizing that data set. Okay, no further data is being added. If further data is being added, if you are normalizing it, that's a whole different scenario. Okay, you just can't compare. So suppose you have a data set, okay, and you normalize that data set, and respect to every data you had some you will be having some Z scores if you are doing Z score normalization. Okay, so then suppose some further data is being added, so that data set is still there and further data is being added, like how in stock market happens, like you are keep on adding data as they are coming and you are analyzing it, right? So suppose that data what you have normalized is there already, and now further new data has arrived and you added them, and again you are normalizing and providing the Z score. So try to understand the Z score. The main thing, what is Z score? Normalization, it's nothing but the whole data set you take, the mean is calculated, the average is calculated. Okay, and that average is just shifted to 0. Okay, and the standard deviation, so mean will be, so the whole data set is it's what should I say, like it's manipulated or it's changed to a data set where you have the mean to be 0 and the standard deviation will be 1. Okay, and what is Z score actually is, it's basically, if you look at the formula, so I think it's not here. So yes, so the Z score is basically, for each point in the data set, the Z score of that point is basically denoting how further it is from the mean value. Okay, so how many standard deviations it is from the mean value. Okay, so now try to understand this fact, that is, when you are changing the data, when further data is getting added up. So suppose the first data set you had some mean, okay, and you had some standard deviation, and you are calculating the data point. What is the z-score of this data point? It is saying that it is these many standard deviations from the mean. Okay, now some new data is coming. Okay, now you are calculating again the mean of the whole thing, the previous data along with the new data, and the mean is changing, and so the standard deviation is changing. Now the new data, you are saying that what is the z-score of the new data? So that new data z-score is being calculated from the new mean. So from the new mean, how many standard deviations it is away from that new average value. So it is like I am 10 feet away from my home and my friend is 20 feet away from his school, and you are comparing how further we are. You are comparing how further we are. I am 10 feet away from my home, and so you understand if the mean is changing. So suppose the first data mean is at my home, the second data mean is my friend's school. Okay, and now I calculated my z-score according to the my home, like I am 10 feet away from my home, and the new data came and the mean is my friend's school. So my friend is 20 feet away from his school, and you are comparing these two data. They are not comparable at all, because the standard deviation is changing. Okay, so you cannot normalize continuous flow of data. So let me show you with proper example. Okay, so suppose here let's take a data set 100, 102, 104, 116. Okay, and let's calculate. So suppose you think that these are the premium values of a strike price. Okay, 100, then 102, 104, and then 116. Okay, you have recorded. And what is the mean? The mean is 105.5 and the standard deviation is this. Okay, so let's calculate the z-score of 116. So the z-score of 116, mean value is 105, 105.5 here, and the standard deviation is this. Okay, so the standard deviation has been copied here. So if you don't believe me, let me copy it again. Okay, Control C, Control delete, Control. Okay, now let's calculate. So 1.68 something. Okay, this is the z-score of the current value of 116 according to the current data set. Okay, this data set, and the mean value of the z-score of 116, that point, the new data which arrived. So the z-score is 1.68. Okay, now again, so after 116, that data is fine, absolutely the same. Okay, after that the data 98, 105, 106, 107, 99, 101, 103, 115. Okay, these data arrived. Okay, and now I am calculating again the z-score of 115 in this data set. Okay, so let's calculate. So I need the standard deviation and the mean for it, and 115 is the value of which whose z-score I am going to calculate. So z-score of 115, and whatever this mean is, this has also been copied here, 104.66 and all those things, and the standard deviation is 5.15, whatever it is. Okay, so everything is fine. I press on calculate. The z-score is 1.87. Okay, so you saw that previously the z-score of 116, which is greater than 115, that 116 is having z-score of 1.6. Okay, and 115 is having a z-score of 1.87. Okay, so you can see 1.68 and 1.87. So now you see that though the value is lower, the z-score became higher. So now what would you say? You can't compare, okay? So what actually happens here is, let me tell you the original story. So what happens here is, with large data set, what happens is the mean becomes almost like the mean doesn't fluctuate much. So then what happens is that when the mean doesn't fluctuate much, then the standard deviation won't also fluctuate much. But it's a hypothetical scenario, okay? It might also fluctuate, but what happens is that in most of the times that happens and the error minimizes, and thus some kind of things work out, okay? The analysis works out sometimes, but sometimes it fails also, but the concept overall is wrong. Even if the analysis is working out, there is a huge margin of error, okay? So the thing is that you cannot normalize continuous flow of data, and at a certain time you can normalize that I have this amount of data set and I am normalizing the whole data set, okay? And then again some data added up, and then again you are normalizing it, but you cannot compare. So that's what the major point is. You cannot compare. Yeah, hi, Bitbull. So this was one of the very big mistake that I have pointed out. You should understand. The second mistake is, you see that someone has commented on my YouTube channel, and then I don't know why that person also deleted that. So suppose that the concept is regarding money flow, okay? So again, one of my member is very pushing me to make money flow, the money flow chart, okay? But you see that, suppose during this scenario, what happened the last day, the money flow will become positive, but the YouTuber will say that delta of money flow will be 0. But you just say Jai Ho, aapka 1 million followers hai, you are absolutely right. You should understand, when will the delta of money flow become 0? It will become 0 almost here, when everything is over. Like you understood that, when you also from the chart understood that this was a fake up move, okay? Because you just go and check the money flow video that the YouTuber has made, and you just think about how will you calculate it here. You'll simply calculate it with the volume, and everything is positive, money flow will be positive. Here money flow will not be 0 or negative or anything. It will be positive. It will be showing you that yes, everything is going upward and you should take buy positions. But no, it doesn't happen that way, okay? So the thing is that there are a lot of other variables, there are a lot of other things, volume, IV, everything has to be considered to finally make the conclusion. So you cannot just like money flow and that will tell you everything. So no. So you should understand that whenever the big players are trying to make a fool out of you, so they are pushing in the cash segment, okay? So and that will also manipulate the data in the futures as well as the options, and the whole data will be manipulated and you will be finally confused there, or you will be bullish. Either you will be bullish or you will be confused. You won't be bearish here, okay? You won't be bearish here. So you will be either bullish or you will be confused. So that's the thing. But I'll show you that when we had this up move, I told clearly that the FIIs were having buying positions at 17,200, 17,100, and at 17,200 the buying amount, the average buying amount was 90 rupees. Okay, and that they did it the previous day. So the previous day analysis I posted that the FIIs have done. So this Thursday, the expiry day, during that day for the next part they did put buying, okay, and the put buying was at 17,100 and 17,200, and that I clearly told even in the morning. So that's the thing. So now we'll discuss those letters in the next part when we discuss the big game being played. And yes, now let's come to the so the money flow concept. Yes, I won't say it's totally wrong, but always it won't work, and you shouldn't just blindly follow that. Okay, there are many other things you should combine with it so that it doesn't have a total effect on your analysis. Okay, because that thing can be easily manipulated. That's why no. The third point is the one commented, and then it was a very big comment. I read it and then I understood that yes, he got this concept from this YouTuber, and it was totally wrong. So the concept is that suppose you see that like 10 rupees 10 rupees 10 rupees 10 times it makes 100 rupees. Okay, but 250 rupees also makes 100 rupees. Okay, now what will you mainly focus on is 250 rupees, right? But no, in the stock market what happens is that if the big players are making positions against the retail traders, so the retail traders are buying in small quantities, okay, and the contracts are getting formed in small amount. So like 10 times and 100, it reaches 100. Okay, it doesn't happen like 50 plus 50. So then also you have to decide if the big players are present or not. So it not only in the scenario where 50 plus 50 big players are present. Okay, so what happens if like 10 plus 10 plus 10 and 10 times, and they are slowly building up their positions, okay, against the retail traders. The retail traders are going for 10 rupees and they are also making 10 rupees, and the contract is being made 10 and 10 times, so 100. Okay, so now understand that it's not like you don't give importance there. So slowly they can build up their positions. We have seen those things many a times, like even here on Wednesday. Okay, I think this was Tuesday or Wednesday, and this was Thursday. Yeah, yes. So on Wednesday here, when market was like in a very narrow range, I clearly told my members that today the final up move would be up, or if it's not up, then there has to be a gap up the next day. Okay, and that happened here. Okay, so I'll show you everything. So here also slowly they make their positions. Now let me tell you the game that was being played this day. So previous day you see it went down. If you go and do check the EOD data analysis of this day. So at 17,000, they FIs made put shots, call shots. Market went down, okay, and they made a profit, but they did not close their positions. And the next day there was a big gap up, which was all of a sudden unexpected by the FIs. But then they were in loss. But I mean, whenever there was a big gap up, they did not take the market down. They closed it. They closed their positions, the call short positions, and they kept the market at the same level, almost flat, and made put shots. So there are two scenarios here. You should understand these things to remain. You should to remain in the stock market. And the thing is that two scenarios here. The FIs were in huge call shots, and yes, they made loss. They closed it and they started building their put short positions. Okay, and the put short positions, they started slowly during the whole day. They started building up, and during that day the up move did not come, but during the next day there was a big gap up. Okay, now here during this thing, that is during Thursday, end of the day data analysis said that put buying was being done. Okay, and if you looked at on Thursday night, I looked at the option chain and I got a clear signal that at 17,100 and 17,200 during the day also I was noticing those positions, and finally at the end of the day also I matched it with the end of the day data, and I knew that at 17,100 and 200 they did put buying. Okay, now you see that market went up here in huge manner. Okay, and they were almost at their buying amount. Okay, so the put buying average price, it was almost near to that. So then they did not start closing them. Okay, instead they started building up positions. Okay, they started building up more put long positions and call short positions. So that's the thing. I mean, you have to follow whether they are closing, and to make up their losses, they are building up new positions on the opposite side or not. Okay, so these are the things you should follow. Okay, so that's the main thing, that it's not important like 50 plus 50 is 100 or 10 plus 10 plus 10 and the whole thing added up 10 times is 100. Okay, so the major point being here is whoever is getting fooled. Okay, so yes, if it's 50 plus 50, so then of course like you caught the big players there, but it's fine. But if it's 10 plus 10 plus 10 10 times also, then also you have to analyze what's actually happening there. So that's the thing. The next concept, the fourth one, the thing is that neutral point. It's a bullshit point. Okay, let me tell you again, it's a bullshit point. One of my members told me one day clearly that this is the neutral point. I marked it here, 17,000, I don't remember actually which day, 17,155. Okay, I clearly showed that person that it's nothing but that YouTuber doesn't do any neutral point analysis. He just checks the intraday resistance and support and marks it as a neutral point, because the concept behind the neutral point, whatever he is saying is that you mark how many short positions and how many long positions are being made, and according to it how many points Nifty can move from there. So it's not like that within the first 15 minutes how the positions made and you are calculating the neutral point, because we have seen over and over again, many times it has happened that in the first 15 minutes whatever the positions have been made, again I mean in the first 1 hour positions have started building up there. Like I mean, if you just see here, okay, the last day, so here I mean the positions that were being made was call shorts here in the first 15 minutes. Okay, and then suddenly jumped. Okay, and then after that also call shorts were being made. And so I mean, if continuously the big players are making positions, the neutral point, what the definition of the neutral point is that the buying and the selling pressure are the same. So if the selling pressure or the buying pressure is continuously changing, if they're continuously making positions or making and then closing, whatever they are doing, so the neutral point won't remain constant. Understand that concept first, that if the big players, it's not like the big players made positions in the first 15 minutes and then they don't make any position. Even I mean till 10 a.m. 11 a.m. they start making, keep on making their positions. We have seen on many days like the market will be flat and they keep on making their positions, and at the final 3 p.m. Candle, you have seen that yes, finally the move came. It has happened. Okay, so there is no such thing as like neutral point is where the buying and the selling pressure are the same. Buying and the selling pressure always vary, always change. It's not about only a single big player. There are prop desks, there are FIIs, there are HNIs. So many people are there and they are following each other, or they are making their own analysis, and many things are happening. So many changes are being made. So it's not about only one big player made some positions in the first 15 minutes. So it might not go with that big player. So finally, like at that point it might not go with that big player. So again further positions will be built up, or they might also close. We have also seen this. Like even in the last to last Thursday at 17,000, the big players were making positions on both the sides. And on put sides, I mean, the big players made and then market went down and they closed. Okay, so finally the big players on the 17,000 call side won. Okay, so that is a bullshit point. Okay, so I have told you several times that it's nothing magic or nothing. I mean, I have also gave you several levels, several important levels. Like you just see 17,228. You just go and check my preview, videos even 3 months earlier. Okay, you'll see that I have told you about this level. So it's nothing like magic. It touched here the last day and then went up, then it reversed. Okay, so these levels you can also identify. These are some of the intraday levels that are being used to just fool you, and I mean, just to tell you that yes, I have found out something new magical. No, try to understand that you are being fooled and nothing else. So I mean, every day you can post whatever that neutral point or whatever it is you can post. I'll just show you that it's nothing but some intraday resistance and support. Okay, and moreover, like suppose I get daily a test paper. Okay, and I myself give the test every day, each and day, at every moment. Okay, I don't see that the question paper is easy or hard. Okay, I just give the exam each and every day, and you have seen my accuracy is near about 100%. Okay, the last 2 weeks, from the last 3 weeks, I have continuously shown that my accuracy is near to about 100% and sometimes exactly 100%. Okay, and I am giving I am showing you the levels, the analysis, throughout the whole day. My probability of going wrong is very, very, very high. If I am giving 30 calls a week, my probability of going wrong is very high. I should go wrong at least, I mean, if out of 10 calls I'm correct 8 calls, then it's a very good ratio. Okay, so 2 calls out of 10 calls if I'm wrong, so out of 30 calls I should get 24 calls right and 6 calls wrong, right? But I'm managing to keep it at 100%, so 30 out of 30 or maybe just 29. Okay, so my members clearly know that. So that's the thing, that the thing is that if instead of 30 calls I were just to give 3 calls or maybe 2 calls a week, so I would have seen that yes, today the question paper is easy, yesterday's data end of the day data, it's totally matching. Now let's jump and conclude and give some live market analysis and take all the credits. देखा मैंने बोला था, ठीक है? So the thing is that I give 10 calls a day and that person gives maybe 3 calls a day. So I asked that member of mine that how many calls is he presenting, so and which day. He told me that there is no fixed day and he gives whenever he wishes. Then I understood that he just waits for the easy question paper. Okay, so that's the thing. I won't have to say anything, but yes, the major point here is being that he is not something like mujhe lagta hai, he doesn't trade like that or he doesn't go on like that, but yes, he should understand his mistakes. And yes, now the next question is yes, let's go to so that's all, and I don't want to talk more of the things. Yes, but I won't say all concepts are wrong, but yes, so I found out these concepts are wrong, so I would also advise you to properly judge the concepts and then follow it. Okay, let's go to the end of the data analysis. So as we have seen that on Thursday there was put long being done, and now you see that futures long positions are very little has been added, future short positions also not in huge quantity has been added up, and yes, option index put shorts. So put shorts, they have also been added, and put long they have call shorts they have also been added. and both have been added almost in same quantity. So the thing is that we have to clearly check tomorrow what new positions are being built. I mean, is the call shorts or the put shorts which are heavier? And and for the put buying, yes, the put buying quantities are there, but the quantities you see that has been added. So those are mainly for hedging of the put shorts, okay. But yes, still the put buyings are still there at 17,100 and 200, and XGX Nifty is indicating a fall. And yeah, so and also here the call long that you see are purely for hedging purpose. So not very huge data in option chain to conclude a very strong thing about the market movement, but yes, put longs are there, and yes, call shorts are also there. So I mean, call shorts and put longs are the ones that are to focus on. But yes, the put shorts I won't be focusing on them, because there are ample put buyings to cover them up, and even if market goes down, they will be in profits, okay. Overall they will be in huge profits, and also they have these future shorts, okay. And majority of these future short positions, they have been made at 17,550. So whenever market went to 17,400, you saw market was pulled down, okay, because a further 100 points up, then majority of these future short positions will be at a loss. So here you see it went to 17,422 here, and then again pulled back down. So that's the thing. And yes, for the levels, again we should watch 17,389 above would be resistance, and tomorrow, as XGX Nifty is indicating 17,108. So here yes, so if it opens around 17,100, then let's go to the 1-day chart. So if it opens near about 17,100, then the next level would be at 16,000. Oh sorry, yes, at 17,000 a resistance would be there, okay. So a new support, so a new support has developed at 17,000. So at 17,000 again it would get some support, and then if it breaks 17,000, then at 16,821 would be the next level. So we should watch the 17,000 level and the 17,228 level. It might act as resistance then, if it gives a gap down at 17,001 near to 17,100, okay. So these are the important levels for now. And for Bank Nifty, let's see. So let's go to the 1-day chart. So for Bank Nifty, it's 39,347, okay. You saw that, you see it touched here, and this day it did not, it wasn't able to cross. So this acted as a very strong resistance, and then it's acting as resistance. Now if it goes down, so 38,300 you should watch. If it goes below that, then 37,908, and then 37,400. So these are the levels in the downward. And above, you know, it's 40,000. So first of all 39,347, and then 40,000, okay. So these are the levels you should watch for in Bank Nifty. And yes, since now the first now let's come back to the end of the day data analysis. Now since in option chain FIIs don't have a huge like call shorts or something, so they, I mean, let's try to read their mind. So they might try to again bring the index up, and then make some call shorts, okay, and then try to then they might take the market down. Or else they can do what? They can now after gap down, people might be bearish, and then they can start huge put shorts and then close these long positions, because you see that here on 7th October I clearly told at 9:43 that at 17,200 and 17,100 FIIs are having put buying positions, okay, and the average price also I told, yes, 1013 when there was this huge up candle, then I clearly told that they bought those put buying at 17,200 at around 90 rupees, okay, that's what their average price was. And during this sudden fake up move, some put writers started to make those put writing positions, but again at 10:22 they started closing, and after that you saw, as I clearly gave the signal that they started closing, then again market fell down, and again market again reversed from the level, okay. So Nifty, yeah, 17,228 Nifty touched, and again it reversed, and during the reversal I told that I was doing call shots at 17,200, okay. So 17,200 I was doing call shots, but it was a very risky trade. But if you don't want to when market was going to 17,300, I was shorting at 17,200, okay. And yes, it was a very risky trade, but those who don't want to take risk like me, they can short at 17,300, 17,400, 17,350. So it's according to one's risk appetite. So I had some nice profits in the last week, so that's why I was taking some risk. But yes, that risk was clearly because of the put buying of the FIIs at 17,200 and 17,100. And you see, I clearly told at 17,200 and 17,100, and then on Friday, now you can see on Friday, and after market you see that XGX Nifty came down to 17,108. Okay, so this is nothing magic. You have to track the big players, and yes, if you think yes, you might think that this Telegram is a fake and everything. So if you join and when I'll add you to this Telegram channel, I have shown you most of the days what I told my members. So if you find that something is not there, I'll give you 10 times what you have paid me. I'll give you back 10 times what you have paid me if anything is fake, okay. So yes, yes, so the things I wanted to discuss, I think I have discussed it. Yes, so now that's the end of the data analysis. And yes, the big game that is being played is from here, from Wednesday the big game was being played, and many have did many loss in the trades due to this game that is being played. So on this day, when they started closing and then put shots were being done, though market was not going up, okay, but then the next day gap up, okay. And here you see that yes, market came down, and on Thursday on Friday, the last day, here though they had put buying, but the market did not fall below 17,228, and again it reversed in huge, like Bank Nifty reversed more than Nifty, and yes, the index is just reversed that as if the FIIs were not having any put buying positions, okay. And then again tomorrow there will be a gap down. So now you will think that yes, if you have to make profit, you have to like keep overnight positions. So during the intraday, market is being manipulated in such a manner, like you can very well see here, such a huge big candle, okay, from the cash segment it was done, but it was totally fake, and again market fell down more than that point, okay, and then again it reversed, okay. So market is trying to show you that your analysis is totally wrong. So and it's very volatile, and anything can happen anytime. So this is basically like this phase comes in the market before a smooth move on either side, okay. Why this move comes? Even 1 month ago, the same scenario happened. The move was abruptly coming, like let me tell you the exact time when FIIs made huge suddenly made huge future shorts, and everyone said that yeah, market is going to fall. Okay, but the intraday analysis, everything was bullish and market was going up and up. It went above 18,000, I mean it near to above 18,000, and there the same thing happened, that market was not following analysis, and finally you see it came down to, from that 18,100 near to 18,100, it came down to this 17,000, near to 17,000. Okay, so even like below 17,000. So now you see that the thing is that like this, after that this ride was smooth, but again here the ride, like during that time I always showed you that whenever there was a red candle coming, after that there was a huge green candle coming, though it shouldn't come because the FIIs were bearish, hugely bearish in the market, but you were being shown that whenever a red candle comes, next candle will be green and it will blow your account. Okay, so that type of scenario happened there at that time also. It's happening. It started from Wednesday, it's happening now. So try to be very, very careful. You might not trade until unless market is giving a smooth directional move, so, or you trade carefully. And yes, the thing is that also as I take positions and I exit very quickly because of this reason, because of these trappings. Okay, because of these traps I exit very quickly. Yes, but and I don't regret. So you should try like me and just take some profit, and overall that profit, it will build up to a huge quantity. Okay, so don't try to go for like 50% in one day or 100% in one day. Okay, and market is like, now it's like a chopping scenario in the market. So they do it because they want to blow your account, and after blowing your account they will smoothly take the market, and you will just watch the market following your analysis smoothly, and you will have no money to trade. Okay, don't do it like this. And once you have a loss, you just become very angry, and you try to recover your loss in the very next trade. You put, I mean in the very next candle you just put your trade that yes, I'll recover my loss. So don't do it like that. Again, it will further blow you up. Okay, because if you had done put buying here and you waited for further fall, then this candle, big candle, you would be surely exiting your put buying, and then you will be bullish and you will think that no, I'll recover my loss now, and you will just buy, and then again it will blow your account. So that's why wait for your move, wait for, you do your end of the day data analysis. If it's matching, go for the trade. If for my members, if both the indicators are giving the same signal, go for the trade. Otherwise just wait and watch. Okay, there will be many many scenarios where you will be able to make huge profits. So wait for those turns, be patient in the market. And yes, that's all for today. So if you have any queries, you can ask. Yeah, hi Vinay. So I think I have discussed everything, all the wrong concepts that are being taught, and the game being played, and the end of the day data analysis. So this video is very it's going to be very helpful to you guys. So if I'm missing anything, you can ask, or otherwise I'll end the video here. So all the best for tomorrow again. So the main thing is that if there is a big gap down tomorrow, don't take any position. So either it might be like there will be two scenarios. Either it will be taken down to 17,000, okay, and then some reversal, because the 17,100 and 200 put buyings will be totally in profit and they will be able to close them, or either otherwise there will be a sudden up move, okay, after a gap down, and then they will make huge call shots, and then finally market would be taken down. So yeah, any of these two scenarios can happen. So you have to basically track, because in option chain, the end of the day data, much data is not there. So In the put shorts, call shorts, you can't conclude very concretely, but only the put buying you can conclude. So try to see what new data, what new positions are being formed tomorrow morning. Okay, so then yeah, you don't have any questions, so thanks for watching, and keep watching and keep learning and trade safely. So see you tomorrow. And yes, if you don't follow me on Twitter, you can follow me on Twitter. So I might give some live analysis update on Twitter this week, because the previous 2 weeks were very busy and I couldn't do it. So this week I might do it, but on which day I am not sure, but yes, I'll try my best. So yeah, thanks for watching. Bye.